Evergrande in debt, $306 billion. What is going on? Let's discuss it.
Took a long way around, look at all we found, and we live it up now. Yeah, we've come so far, made us who we are, and we live it up now.
Western investors are getting their fingers burned, charred right now after piling in exchange-traded funds holding China Evergrande debt in an increasingly desperate hunt for, what are we looking for? We're looking for those yields, and sometimes we get burned. So the world's most indebted property developer is battling a severe liquidity crisis, which has sent shockwaves across China's entire property sector and shaken equity markets across the world. We're feeling it over here in the United States, particularly affecting a number of bond and equity ETFs right now. So experts, of course, are weighing in on this tragedy, on both sides. And experts are making increasingly grim predictions about the developer's ability to hold on without, you hear it, you're going to hear it, a government bailout. That's right, another government bailout. Consequences of a possible collapse if they don't get a lifeline. So it's pretty staggering, the numbers, when you delve into the data here in the micro. Evergrande reportedly owes money to around 171 domestic banks and 121 other financial firms to the tune, get this, at the moment, $306 billion. And that's from the Economist Intelligence Unit's EIU. Mr. Mattie told the BBC. So if Evergrande defaults, banks and other lenders may be forced to lend less. The property developer is so over-leveraged that regulators have cut it off at the knees from further borrowing, pushing it to the brink of, unfortunately, default. So a lot of people weighed in, a lot of power players. One gentleman I follow, Ray Dalio, billionaire, founder and co-chief investment banker at Bridgewater Associates, says China Evergrande Group debt crisis, it's all manageable. It's no big deal. Even as lenders are hurt by the property developer's troubles, investors will just shrug it off. That's how it works, Dale says in an interview with Tom from Bloomberg. So I think what he's saying, when I look at the data and read between the lines, he's saying that if your debt is in your own currency, you can just work it out. You can just work it out. So we'll have to see if that holds true. Ray, keep an eye on it. So what is China Evergrande Group? I heard about these folks in the early 2000s. Evergrande they're just enormous. They're a behemoth development company based in southeastern China. They rose to prominence constructing homes and apartment buildings just as the country began to, introduce private home ownership. It sustained itself on, a healthy appetite for expansion and constant flow of cash, of course, through payments from consumers and, of course, prolific, monstrous borrowing. So the company was founded in 1996. It owns more than 1,300 developmental projects in over 280 cities and expanded other major industries. It's dabbing in electric car market, mineral exchange group, a soccer team, even a theme park. So from water to soccer to theme parks, as the company has grown and matured, they've decided to get a little deep into a lot of different things, which I personally think is dangerous. So the founder, ultra wealthy guy, proclaimed in 2017 speech to employees, development is the absolute principle, expansion, parodying a famous declaration by the late Chinese leader, revolutionary Deng. The saying anchored a philosophy of unmitigated economic growth, largely fueled by the real estate sector. I like that thought process. Heavy into real estate. So how did Evergrande end up in trouble? It's an interesting little tale, but Evergrande is just, bottom line, is over leveraged. Fancy way of saying they got too much debt, $306 billion. But Ray says it's no big deal. It's no big deal. The company has pre-sold roughly 1.4 million apartments worth more than 200 billion. That is not, they haven't finished building. They haven't finished building. So it's begun paying its bills by offloading unfinished projects to contractors such as construction companies and painters. So they're unloading that debt. So that's not good. So for a while, Evergrande's debt was not a huge issue to Chinese regulators. A gentleman by the name of Bill Bishop, who writes a newsletter, he said, they weren't really worried about it. The Chinese president in 2018, he unveiled 3 tough battles for the nation's regulatory state. Gave a great speech about poverty, pollution, and financial risk. And then in 2020, regulators imposed 3 red lines on developers and their borrowing habits. And the more over leveraged the developer was, the less regulators would allow it to borrow. Of course, they got a kickback. No, I'm just kidding. So Evergrande breached all 3 red lines. I wonder how that happened. So regulators placed a hard cap on its debt. The main way the company created, you guessed it, liquidity. So how does China's housing market fit into this crisis? It's pretty serious. So as the government loosened controls over the economy in the early 90s, and that created a boom, right, and created an opening for capitalists, and land ownership quickly caught on, and everyone wanted to get into the game. Land, of course, became important collateral as individuals, businesses, and financial institutions were given a lot of leeway back in the 90s to get into that marketplace. So as China's middle class grew and homeownership rates rose, the ever-increasing value of land underpinned much of the new economic growth. So, what's going to happen with this, with all this borrowing? You guessed it, angry home buyers are waiting on as many as 1.6 million apartments. 1.6 million apartments, suppliers that sold cement, paint, copper pipes are all owed more than 100 billion in payments. Employees who were strong-armed into lending are panicking. They're in an absolute panic now that the company cannot repay them on time. They have fallen behind. So the Evergrande crisis, bottom line, it pierces the veil of the Chinese real estate sector and the artificially valued tracts of land and development projects. Experts are saying that could depress existing home values, which could dampen Chinese consumer spending. You think, guess what's coming? A freight chain. And this is a consequence that could reverberate, my concern from the research, worldwide. That's the implications of this. Chinese homeowners view the property holdings much like America homeownership. It's very important on both sides of the pond. So it's the largest investment, and it grows in value. The long-term economic fortunes improve, right? So it is, if it shrinks in value, people will feel poor. Everyone's got all this equity in their homes in the United States right now. And this, there is a chance that it could start somewhat of a prolonged slowdown. This could be the trigger worldwide. It doesn't look good there. So what does the crisis mean for the global markets overall? Global markets plunged. The stock market took a hit over 600 on the Evergrande developments, and the Dow Jones Industrial Average plunged then 6, then 9, I think roughly about 971 points before cutting its losses to 614. So a 1.8% drop. So, and the Hong Kong skid about 3.3%. Meanwhile, gold, a traditional safe harbor for investors, jumped nearly 0.8%. All the action is a good reflection of the jitters traders are feeling right now with this development. So it's concerning. Both sides have said, the billionaire class has spoken, and other people that it's manageable because it's their own currency. They let them cross these 3 red lines, and people got a little greedy. So we'll have to keep an eye on it, how this is handled. I don't want to see a bailout. I don't think that's the way to go. Hopefully that won't happen. But this could have, the concern is, in the real estate sector, global implications in affecting the United States markets. So it's very concerning. Take care, be safe, be kind. Ciao.